Well, you do the same. In 2008, you gave banks a bailout with tax money, and now you give them a bailout with inflation. And in both situations, you help banks, you shield them from the consequences of their own stupid behavior, and you do so at the expense of the community, but because it's not going through the coffins of your national treasury, you don't see it immediately, you don't understand what's happening, and second of all, there's nothing you can do about it. Because if you don't like your national government doing this, bailing out banks, you can vote for somebody else. But the European Central Bank will be there longer than your own national government. And now people don't understand it, and they simply suffer the consequences. They see that housing prices are going up, they can't live anywhere, and they don't, but it is theft.
Welcome to the Gold Republic podcast. My name is Bart Brands.
And I'm Alexei Jordanov. In our weekly podcast, we invite guests from all over the world to get valuable insights
into the emergence of a new monetary system through the lens of precious metals, cryptocurrencies, and other financial instruments. Welcome to a new episode of the Gold Republic podcast. Today, our guest, a returning guest, Arno Wellens. Arno, you grace us with your presence. Thank you very much, of course.
Building expectations.
That's how we like to do it, and you always deliver. So it's I think it's going to be more expectations. We're setting the bar high, Arno. Arno, it's the end of 2021. So what Alexei and I would like to propose is that we take a look back to this past year, see what happened and what was actually what you think were the most important things that happened in 2021, and perhaps they might be indicators for what's up in the future. So just to begin, what do you feel happened in 2021, which most people would feel outraged by if they knew it?
Interesting. It is a two-stage missile rocket, and it is the European digital identity. And with it comes a lot. What I think we've mentioned in earlier podcasts is that if you want to build a currency union, you need to have a strong central government that can levy taxes to keep everything together. And if you don't do that, you'll get a flawed Eurozone, which is the one we are living in. And governments have taken the opportunity provided by Corona to introduce euro bonds, etc. And one thing they've done in particularly is the European, in the Netherlands you call it a BSN, Burger Service Number, and I think in English it would be, I don't know if you...
Social service
security number. Yeah.
Social security number, I would guess.
Yeah, and it is one number that everybody has. It is on your passport or your driving license, and it defines who you are. Or it doesn't define who you are, but there are no two people with the same social service number. And what the European Union has done at the end of May 2021 is issue a decree. It's basically a decree, but the European Commission does that with the approval, the explicit approval of the government leaders. So everybody wants this, but people in member states, they don't want this. And it is that there should be a European social security number. So the European Commission will actually be some sort of a government over you. And the next step is obviously that you can hand out subsidies to people. For example, if they have problem paying their energy bills, which is likely to come, we'll get a very cold winter. But then naturally also tax people. And the European Commission, we've mentioned it before, I think, you can't vote for them or against them. European Parliament has no right of initiative, so it's a little bit autocratic. And they've done it by the end of May 2021, and it should be effective within 12 months. So by early June 2022, we are European subjects and no longer really Dutch. And that is, if you think about it and the ramifications that it has, that's enormous. And there has never been any debate about it. It was already planned. People weren't paying attention because of the pandemic. And boom, there it is.
So it will be forced upon every member states within the European Union.
Yeah, they have 12 months to comply from June 3rd, 2021.
You've done a lot of research about it, so you have it also documented, and
Yes,
we can also pass it.
Yes, absolutely. It's called the EIDAS directive. EIDAS. This Electronic Data and Trust Services, but in the abbreviation the T doesn't show up. I don't know why. So it's EIDAS directive, Article 6, Article 11, and it's simply there.
So that's from the member state perspective. Then from the citizens of every member state, is this then, as we citizens, individuals on this table will be in a 12 months time be forced to use such a service, or will it be provided to us and the member states have to basically propose it and we have the choice, yes or no, to be able to use it?
That's how it's being communicated.
Okay,
isn't that convenient? If you have to use European Union services, or you want to open a bank account in another member state, for example, you only need to show your relevant data. So it's a service that we are providing. However, if you do that, you need to literally identify every European citizen if he wants it or not. So you're in it even without your approval. So you can say, okay, the government is delivering me a service, but I haven't asked for the service. I don't understand why it is necessary. But from the point of European integration, it is very necessary, because any modern government, Western government, knows who its citizens are and can identify them with a unique key, as IT people call it. You need to be in a database. And numbers such and so forth should be José from Madrid and not somebody from the Baltic states or whatever. So that's what a state does.
And what's the problem?
The problem is there's a number of problems. Germany has a new government, and what they have stated is that they believe that the European Union should become organized as Germany is organized. It should be a federal government. And the federal government obviously knows who its citizens are. There's something being organized right now, and it is called the Conference on the Future of Europe. And that is a clear reference to the Conference on Europe, which was held in 1948. And there you had the start of the pro-European movement, the European integration movement. And what happens now is that the Conference on the Future of Europe, as they call it, it is a panel with 800 people selected throughout the European Union, and they can make recommendations. But only the people that are really interested in European integration are being part of that forum. I mean, if you would ask me to be part of that forum, I would obviously decline, because I don't think that the European Union should make laws against discrimination. Only member states should do that. But if you read the recommendations from these panels, they say, well, the European Union should act against gender discrimination, for example. So if your company isn't gender balanced, the European Commission should act, which is quite an infringement on national law. So these 800 people, they're very pro-Europe. They've come up with a number of solutions to problems that I think are not really problems. And both the Dutch and the new German government have said that they will accept these recommendations and act on it and adjust the European treaty. And that means that the European Commission will get a lot more power. But the powers that they will receive have never been mentioned in elections. And that I think is very anti-democratic.
And so that is something that you feel should really upset a lot of people if they knew what was happening.
Yes, because what is also known is that the majority of, for example, the Dutch people, but most Northern European nations, they don't want this. They think that they are in the European Union for trade, that we make some money, it's convenient, but you don't get a superstate. However, that superstate is building itself, and it will become very hard to stop it. So what will happen in the coming months? Because also in June 2022, there's going to be a very important month. At that time, all the recommendations from this Conference of the Future of Europe will be published. And it's very easy to predict what the contents are. It's about European tax, European climate policy, etc. And European parties have said, also the parties in German parliament that are now forming the government, they say we will wait until we receive the recommendations and then we will act on that. But it means that if you have voted for one of these parties, you have no idea what these recommendations will be and what you're actually voting for. If you really want, for example, European taxes to enforce gender equality, that should be part of the German or the Dutch election. You can't do it this way. You can't say, I will follow these recommendations, whatever they are. Then you don't know what you're voting for. And especially in the Netherlands, there's been a declaration by the new government of what they're going to do. And they specifically mentioned that conference without having communicated that to the people.
So if I understand it well, and I'm going to try to repeat it and see if I understood your point correctly, your problem is mainly that it's not legitimate the way the political process continues into basically developing bodies of the European Union into a direction where it would be less and less legitimate in terms of the sovereignty of each member state.
Yes, you will lose sovereignty.
And so what does this have to do with the European digital identity wallet?
Well, what's happening is that the European Union has always been looking for powers that usually belong to a sovereign. And it is very easy to explain why that is. If you have a currency union, you need to have a strong central government that is able to levy taxes. And I think I've mentioned it before. If you don't believe it, look for Maurice Obstveld, former chief economist of the International Monetary Fund. And as he explained in his work, simply use Google. He says, if you look at the United States, for example, sometimes there are states that pay up to 10% of their own income to the federation. So if you want to be one, you have to make sacrifices for unity. And if you don't want to bring those sacrifices that are necessary, that are required, then obviously your project will fail. And the European Union has always said, no, you know what, we're going to start with a currency union, but there will be no transfers of money. Now, that's obviously a road to failure. Then there are crises, and then these heads of government come together and they say, okay, then we need European taxes, and they should be quite high. However, people have always been told, we're not going to do that. We're not going to accept European taxes, European debt, for example. And while they say that, they are actually introducing it. And I think if you're such a proponent of European integration, and these Eurobonds and European taxes, you need to have them. Otherwise, you can't have a full European federation with a currency. If you're such a proponent of it, why don't you go outside to people, to your voters, and explain to them what you are doing, why you're doing it, why it's necessary, and why it's better than the alternative? But the fact that you're doing it behind people's back, that really bothers me. Because you know, and there have been surveys. For example, when you had the Corona Fund, you now have a European Corona Fund, the Dutch people were asked who is in favor of permanent transfers. 72% said no. 72% of the Dutch people don't want to pay for other nations.
To clarify, permanent transfers of
money
to other member states.
Yes. And when you know that, and you have elections, at that point in time, you should say, okay, we're a democracy, people don't want it, we're not going to do this. And then it is still being decided anyway. And the German government has said, we are going to build a European federation. And the Dutch government, if you look at their own government declaration, it's basically a copy. So all promises that have been made during the elections are being broken. And I think that people will get very angry once it happens, once you see these European taxes coming. And a lot of people already have a very hard time making the end of the month. Now you have additional taxes.
You have both additional taxes and the emergence, because talking about Corona Fund and of course the introduction essentially this year of all these QR codes, could that be a road to this new digital wallet?
Yes, it is. The QR code is never going away. It is your European passport, because
it will turn into.
It already
change.
is.
Okay,
it is.
It is,
because what is European the EIDAS directive? What it says is that for Europeans, we Europeans, we like to travel. Well, depends on what your definition of European is, but it says we Europeans like to travel. And very often we Europeans, we have to show data that are not relevant at that particular moment. For example, if you rent a car and you have to present your driver license, your gender is mentioned on your driver's license, but then you have to show data that are not relevant for that particular moment. Mm-hmm. So what this EIDAS directive says is that you should have a digital tool to show your attributes of identity. Your digital attributes of identity. That's how it's being phrased. So you can, at a certain point in time, so you control your data. That's how they put it. But I don't want my data to be in the digital wallet anyway. But that's not an option. All my data are going to be pulled in that digital wallet. But then I can control it. And for example, when I want to rent a car, I can give you the number of my driver license, but you won't see what my gender is. But if you think about it, this idea of attributes, that is your QR code. Because if you have a QR code, the one who uses the other side of the app sees your initials, your date of birth, so it can be checked against your passport, and the question of whether or not you have been vaccinated. Mm-hmm. That is your European digital identity wallet. And do you really think that now that all this technology has been installed, technology that should be installed anyway by June the 3rd, 2022, that they're going to get rid of the QR code? It's going to get all sorts of extensions. Yeah, and then people will say, oh, it's so convenient.
Sorry. Just to expand on that question, we've in across the world, actually, you see a lot of resistance against this Corona passport, essentially.
Yeah.
And these QR codes. But then again, it will be implemented by
against
June
your will,
next year. Wouldn't that just increase the anger?
I think so.
Because it's mostly that specific part that people really, they want to resist that.
Yeah, but if you see what people have accepted up to now, people have let so many things happen. So I'm afraid that they will accept this too. And the next step is very obvious. What you're going to see, and it is already a known and a communicated risk. I mean, governments and IT projects aren't the best marriage. These data will get hacked. We haven't mentioned this before. If I can tell you something about something that happened in Malta, and why it's relevant. There was a certain lady in Malta. Her name is Daphne Galicia Caruana.
The journalist.
The journalist.
Who was murdered.
Exactly. And what she did was she investigated the abuse of European passports. Because if you have a Maltese passport, you have a European passport.
Same in Cyprus, they also sell this, right?
Exactly. Yeah. They sell these passports. And countries that have an association agreement with the European Union, like Moldova, they sell it too, but then they sell visa. So Malta says you can actually buy a passport for 200,000, and Moldova says, oh, we're not a full member yet, like Ukraine, but they will be members. So you can only get a visa. You can only get visa-free travel. So our passports are worth 100,000. What Daphne Galicia Caruana found out is that Maltese officials actually sell these passports, and that they will help you with a procedure against a little bribe to be declared Maltese in a faster track. And all sorts of oligarchs, also criminals. You can imagine what kind of people these are. They use this corruption to get a European passport. Now, a lot of proponents of European integration say, look, there's a Maltese problem over there. If all the European nations stand together and basically gang up against the crime and the corruption, you can make a much stronger fist. And you have to pool your resources, that's what they say. But these people are mistaken, because she found out about this corruption, she did her research, and that's why she was killed. Under normal circumstances, people would never kill for a Maltese passport. They kill for a Maltese passport because it is also a European passport. So actually, you're making the risk of crime greater. Now think what happens with a European digital identity wallet. ING has already made an app that combines your banking data with your medical records. So in Belgium, if you use, it's called It's Me. So if you access your banking records, you also get your medical records.
Sounds like the start of an adult song. It's me.
It's me. That's it. That's it. That might be. I'm going to ask it, but think about it. Think about it. That every European is using this app, and the company that's being used for this. It's a Belgian corporation. It's a few years old, and it's making a lot of losses. And a group of banks is accepting these losses because they know this will be the standard throughout Europe, and they have also added some equity capital to that particular company. I'll send it to you because I say we're going for European integration. So we have this Belgian system, but we're going to use it throughout Europe. So every European will have a digital tool in which you can access everything that you have, from your online social media behavior to your banking data to your health records, you name it. And the thing is that all these data are interconnected throughout Europe. That means that if one criminal gets to hack, let's say, a computer in Bulgaria and have access to those medical records, they have access because these systems should be able to communicate. Then you have access to all medical data of every European throughout the European Union. And that would give rise to all new sorts of crime and criminal activity that we have no answer for. And then you get a real crisis, and then we say, okay, we must give complete control to the European Commission, etc. But if you don't, I don't want it for this reason.
Yeah.
But there's no way I can stop it. But the only thing that you can do is ask your doctor to get rid of your medical records. That's the safest thing you can do. So at least people can't hack that and use it against you.
So I see two dimensions here. I see again the political one, and then there's a technological one. And if you think about the technological one, then the first thing that pops into my mind is blockchain, and the fact that if you use decentralized databases, those problems would happen maybe less, like basically the access of data, theft, hacking, all of that, right?
But it will also never go away.
Exactly, immutability. And that's a fundamental question. And if, we should have data that is non-deletable or unretrievable. And then there's a political one. That's, I think, what bothers you most is the legitimacy of it. But now, if we take it back now to the financial system, because we covered that, and it's also like the aspect we want to also get about this part is, and also in general, and I think we mentioned this in also a couple of episodes, so I'm kind of feel like I'm repeating myself, but in general, we are witnessing a convergence of domains, if it's on a political level, technological level, on a social, cultural, legal, on all kinds of domains merging for the good or for the bad. And it's also the case for the political system and the financial system. So then the question is, are we witnessing a politicization?
Politicization.
Politicization. Politicization.
What's it in French?
Politicization. I don't even know, actually.
Wir werden ein bisschen Politik machen, ja.
The politicization
of your financial system, yes.
Okay.
Yes.
Of the financial system, or the financialization of politics.
Isn't that the same? Because I think that it is a marriage between between the two, and they will merge. What we have in the Western world, and especially in the European Union, we have an excessive amount of debt that needs to be serviced, needs to be addressed. We need a big reset, meaning that we get rid of all the debt rather than a great reset, which is complete politicization. There, I said it.
In one try.
You left me struggling.
I'm sorry. Well, maybe I did it wrong way. I will have somebody.
That was beautiful.
I'm sorry. I didn't mean to do that.
No, it's fine. It's funny.
This political aspect, everything becoming political, you had it coming for years. So what's happening now was basically invented in 2015 and 2016. And it has to do with central bank digital currency. In the end, the European Union can only survive if it abandons cash. There's a reason for that. That's why you have central bank digital currency.
If it bans cash.
It is, sorry?
If it bans cash.
If it bans cash, we must get rid of cash. Or at least I don't think you should do that, but
okay,
that's the way you're heading. And the reason is very simple. I've mentioned this in another podcast, and then people said you're a conspiracy theorist. How on earth can you?
Which podcast?
V for Valentine.
Okay,
it's in Dutch.
Robert.
I'm sorry. Yeah. Anyway, what I did, and I said I'm a journalist, and for some reason, I'm a journalist for some reason, but for some reason I also decide to read annual reports of central banks, and in those central bank annual reports I find something. And in the annual report of the Bank of International Settlements. And it is clearly there. And it is a certain phrase. And I always say that's why it makes me angry. I wanted to phrase it differently, but there's a certain sentence, and I read it, and it captures me. But I don't make it up. I mean, a crazy conspiracy theorist would make stuff up, but I simply read it. And what I come across is the zero lower bound on monetary policy transmission.
Sounds barbaric.
It is. It's horrible. What it is quite simple. It means that if you have a central bank that wants to lower the interest rate in order for people to be motivated to spend more, so that's your trick to kickstart the economy. That's monetary policy transmission. So you have monetary policy. We want people to spend more. How can we do that? We lower the interest rate. Then, if the central bankers decide that the public should act on that, the transmission means, are they also doing what they're supposed to do? That's what happens. And with interest, your interest weapon will lose its power once you get closer to zero or a little bit below zero. And the reason is very simple. If the interest rate is 4% and you go from 4% to 2%, then you might say, "Oh, I get less free money from simply having it idly on the bank." So you might spend it. That is ordinary old school monetary policy transmission. However, if you're below zero and the central bank decides to lower the interest rate even more, so it becomes negative, you earn money if you go to the ATM. Think about it. If there's a negative interest rate on your bank account and it bothers you, so let's say you have 100,000 euro on your bank account and the central bank says, "I'm going to take 2,000 euro from you," because that's monetary policy.
Mm-hmm.
You might prevent that from happening by spending 50,000 euro. That's one way to escape the incentive that the central bank wants to impose on you. However, if you withdraw your balance, you
hoard cash,
and you put it in the Swiss vault.
Bingo. And the central bank, the European Central Bank, began mentioning this problem, the zero lower bound, with respect to monetary policy transmission. Once again, I'm not making this up. I'm reading this somewhere. That's why I'm saying it.
We will put it on screen.
Sure. So people, I will send them some links where you can find it. It was the Swedish Central Bank and the Malaysian Central Bank that came up with it first. And they did it because there are some economists working there and they're just doing what they're doing. And they're saying, hey, theoretically speaking, if you think about it, you have this zero lower bound problem. Then the ECB decided to lower the interest rate below 0 in 2016. And immediately they noticed, but to a small extent, they noticed that this effect existed.
Cash withdrawal.
Yeah. It's about, if I remember correctly, it's some 20 billion euro in that year. So people withdrew 20 billion euro.
Compared to?
I don't know.
To give a measure, because if, let's say, past years was just like 10 billion, then you can say it's
well,
twice.
Yeah, people add, usually you add to your bank account because it earns interest, so you make money or currency. But as soon as people start withdrawing, it's 20 billion loss, essentially, because normally they add.
I will send a link in the comments with the exact report. Right. But the effect is there, and they noticed it. And then the obvious next step is that you prevent people from escaping the incentive, and that means that you get a cash-free society.
Because of course, if you cannot retrieve the cash, then there is no problem of keeping the it's
exactly.
Obvious, yeah.
That's what this is about. But if you want to do that, you need to have a bank account on a European level, because everybody has digital cash at the ECB. So you need to have a European institution that knows who everybody is and has a unique key, so a unique identification number for everybody. And while this is being implemented, without anybody ever asking for it, while this is being implemented, what the European Union is also doing is, because of the coming winter and the gas shortages that we'll face, is that the European Union said we must be able to borrow cash, not really cash, but issue bonds, so that we can provide subsidies to people to make sure that they can deal with the energy crisis. And that requires as well that the European Commission knows who you are. So they're getting all the features of a state. And you could have seen this coming from about 2016, when the interest rate went below 0 and there was no end in sight. At that point in time, everybody knew that the central bank can't stop printing money. They were only really been doing it for a year at that point in time. And they were going to have, it was very obviously that they were going to do it for years. And after a few years already, which is now, we had the next crisis. So they continue and they can continue and they continue buy bonds that have been issued already. That's how the central bank works. It's like we did the next time or the previous time with the Bonti.
The Bonti.
Yeah, it's an asset swap. If central banks decide to lower the interest rate, that also brings a whole new range of assets that they can buy.
Yeah.
So they can basically help banks get rid of their toxic assets. That's also what they're doing. They can lower interest rates to motivate people more and more to spend their cash rather than to hoard it. And in the meantime, they need to buy all these assets to create liquidity. And they keep on doing it and keep on doing it. And at a certain point of time, we will see an interest rate that is a few percentages below zero, minus.
Okay.
And when you're there, then this hoarding, the ATM effect, then it really will become much stronger.
Ramp up, yeah.
And before that happens, you must have removed that possibility from people. And the only way you can do that is create a cash-free society. Mm-hmm. But also a Bitcoin-free or stablecoin-free society, because those are escape routes as well.
Yeah, private money. So there's something that triggers me, obviously, and I'm going to summarize this.
Yeah, you're triggered. You're obviously triggered.
I'm going to summarize it.
I feel threatened here.
Yeah. No, you shouldn't be threatened at all.
Do we have some?
Why would you be threatened in the first place? Do I look threatening?
Mm-hmm.
No, you don't.
Nah, I'm just kidding.
Like Arno has a history of having Russian mob threatening him, and now he looks and I
it was mainly Ukrainian, Moldovan, by the way. That's also Russian.
Another story for another time, maybe. After records. So, if we have a negative interest rate environment, which also the IMF in 2019, and we had this conversation with Aiden as well, Aiden Mujic, and he said that in the 2019, right before COVID hit, a few months before, there was an article, blog post, so it also is to be dissociated as, let's say, an official communication and these kind of things, but still, it's important. And then I've actually digged into that, and indeed, there's actually not just one, but a couple of papers, and not just from the IMF, but from all kinds of other central banks and think tanks and so on, about how negative interest rates will be the solution towards future problems, because the problem is always delayed further and further. And then there's another thing that I'm thinking about is that we have very high inflation levels at the moment. We have in the Netherlands 5%, in the US it's 7%, PPI here in the US is also 9%. So it's ever increasing, and they say now we reach peak. So that's of course one question. But if you have negative interest rates and people are incentivized to spend digital cash, then isn't that creating velocity, which is the movement of €1 being passed around and then
but that is what you want to do.
Accelerating inflation even more.
But
wouldn't that be a problem?
No, but there's two problems that you want to solve. That's the issue here. But central banks in the short run, mainly the ECB, they want to stimulate the economy by printing more money, lowering interest rates even more, and that obviously causes inflation. There's no other way around it. If you have the same number of goods or a decreasing number of goods, and you create more money, then the relative value of that money will decrease.
Well, only I think it's important to precise, only if it's in this economy and not if it's interbanking. If it's interbanking, I mean, you can shoot 2 billion up to the moon, and it's not going to create inflation because it's being used.
Well, an interesting side effect if you do that, and that's precisely what's going on right now, is then you're bailing out the banks. That's what's happening right now.
What do you mean?
Because in 2008, what happened is 2008 banks had crappy assets, and they had assets that represented a certain value. They had a book value, but they were making losses on it. And if you have an asset that's resulting in losses, the theoretical value of that is zero. Because who would pay something for something that only causes more losses? In one of my videos, I compared it to a cow drinking milk. You can say, wait a minute, aren't cows allowed to drink milk? I mean, it's an inter-cow product, milk, an inter-cow commodity.
This is wild, true.
But still, the idea, the economical idea of a cow is that it yields milk. Hey, I will buy this cow because it gives me 500 gallons of milk or whatever.
Yeah.
And some meat in the end. So you have dividends in the short run, and termination, and there's a terminal value. That's the idea of a cow, and then you eat it. Yummy. Be good for the cow in the meantime.
In the meantime?
In the meantime, yeah. What's happening now, or what's happening back then, is that governments would say, you know what, I will raise taxes, increase my deficit, and even do cuts on healthcare and schooling, etc., to finance the bailout for the banks. And that was very problematic because people got angry. And you had all these movements, you had the Occupy movement and whatever. That was really dangerous. We can't do that again. If you think about it, right now the central bank does the same, but nobody understands what's happening. First of all, because they don't read central bank annual reports. Second of all, because it's a little bit harder to understand what's happening right now, but it is basically the same. Because in 2008, when they were bailing out banks with public money, you prevent the bank from suffering the consequences of their own failure, but you do so at the expense of ordinary members of the community who have no say in it. Because if you ask me, Arno, can I take some of your tax money to bail out this bank? I would say, no. I believe in moral hazard. Let him burn. And most people will think that way. That's how it went back then, but you can't do that too often. What's happening right now with negative interest, and to some extent that is a solution, but I don't think that it's a solution that the democracy should seek, or liberal democracy. If the interest rates are low and they start to decrease, at a certain point of time they become negative, and assets that have a negative yield can from that point on also be bought by the central bank. Because the central bank can only buy assets with an interest rate or a yield equal to the deposit facility rate. So if your deposit facility rate decreases to below 0, you can also buy assets with a return that is below 0.
And why?
But an asset with a return below 0, in the banking sector, we call that crap. That's the mess you want to get rid of.
It's a junk bond.
That's a junk, exactly. Those are the products you've issued them. They have a book value, but they give you a negative return. Why do they give you a negative return? Because they were based on stupid investments. It's what Lehman Brothers and what Deutsche Bank had and have in their books. In 2008, the government said, you know what, give me the crap and I will bear the consequences. Basically, my taxpayers will do that. That got taxpayers very angry. What's happening right now is that the central bank says, give me all your crappy loans. Meaning that those crappy loans will no longer cause any damage to the balance sheets of the banks where they came from. Mm-hmm. So they're not eating the equity of that particular bank. Mm. But if you think about it, that's the same as bailing out a bank. And the persons who are paying for it, because you can't create money out of nothing, the people who are footing the bill are again your ordinary members in society, because they have to deal with inflation.
Yeah. So it's the
same outcome, only through a more difficult mechanism. Yes. And now people don't understand it, and they simply suffer the consequences. They see that housing prices are going up. They can't live anywhere, and they don't. But it is theft. There's nothing more or less.
Stealth bailout.
Yeah, a stealth bailout. That's what it is.
Privatizing gains and profits, socializing losses.
Yeah, that's what it is.
Yeah.
So, just to resume my question, how would you resume that in just a few sentences?
What I just said?
Yeah.
Well, you do the same. In 2008, you gave banks a bailout with tax money, and now you give them a bailout with inflation. And in both situations, you help banks, you shield them from the consequences of their own stupid behavior, and you do so at the expense of the community, but because it's not going through the coffers of your national treasury, you don't see it immediately, you don't understand what's happening, and second of all, there's nothing you can do about it. Mm. Because if you don't like your national government doing this, bailing out banks, you can vote for somebody else. But the European Central Bank will be there longer than your own national government.
So paradoxically, and now it's a jump that might be a bit too big here, but when you look at China and Evergrande, the Chinese Communistic Party decided not, if I'm not mistaken, to not bail them out because of this moral hazard of expectations of being bailed out when you're too big to fail.
Yeah,
proving that actually, and they are of course cushioning as much as possible.
They're doing something absolutely. It's not as if they don't do anything. You know?
No, of course they do. They have to, right?
Yeah.
And I'm not sure how much you follow and how much you can share about it, but this is actually paradoxically an example about a certain type of financial discipline, in a way, from the part of a state who has, on the opposite, a social credit system that we condemn very undemocratic, but are conducing maybe. I'm just putting it out. It's a question.
No, this is it.
Better, more moral financial management than Western liberal democracies.
Yeah. Now you see what we've come to. If you think about it,
who's the real evil then? Knievel.
That's us now, and because this is absolutely morally wrong. You're taking money from people. You're threatening their livelihoods. You make it impossible for them to live normal lives. And sometimes people, when I say something like this, they respond with, "Aren't you being a little bit dramatic, etc." But think about what it does. I mean, if you say 6% inflation is never transitory. It is never. And
it compounds. That's what
it compounds. People don't understand it.
Per month, and it eats up and eats up and eats up.
Yeah, if you lose 10% of your purchasing power in 1 year, you will continue all consecutive years with this.
In 5 years' time, you have half left, right, or something like that.
And people don't understand it. So it is never transitory until it is being corrected, and there is no correction. So the working class people in Western democracies, they will suffer more and more and more, and I don't understand why they're accepting it. It's mainly the case in the eurozone, but you're absolutely right. this bailing out of banks, it is completely immoral. Maybe we can learn from China in that regard, but not in any other. But
I would like to explore what Alexei said about this social credit system, because if we go back to the discussion or the talk about how the European Union is now going to implement a European passport, how the Bank of International Settlements is proposing a cashless society in which negative interest rates are implementable on any moment, that would of course cause major, I could perceive major resistance. Would the logical conclusion not be that then the European Commission would have to implement a similar type of social credit system to try to keep this project going?
There you need handouts. There you can give handouts through that system. That's what I'm afraid of.
And maybe punish the people that want to.
Yeah, because you feel you're angry, but then again you don't have the European digital identity wallet, and it's €1,000 in there for everybody. That would be very simple to do that. Would be very simple to do that. That's what I'm afraid of. And then nobody thinks about the real long-term consequences and the question of, can a government appoint itself? The obvious answer from the historical point of view, if you look at 400 years of history, is that in a liberal democracy, you can't take such steps without the explicit approval of your population. And Corona is being used to implement a lot of these measures without the population ever being asked. And suddenly, then they will see what's going on. But then the damage has been done.
If you look at the way the measures have been rolled out, and this is more now of a process base, it doesn't matter what is being rolled out here, but I think it's very interesting to see the mechanics of the way access has been limited in phases. At first, you needed basically a test to access big events. Now you need a test to access bars, public transport in some places. Then you have a different type of what they call a green pass, for example, in Italy, where you need to be vaccinated to basically having recovered to access even like public transport.
Your work,
you work now and these kind of, so it's a very phased out step-by-step mechanics of access. And now if you take and it's very slowly testing the boundaries of what people accept. And this is where I totally agree with you. And you can agree or disagree with the content of this whole thing of being pandemic or not, or Corona, all of that, but doesn't actually really matter, because here it's about the process. And now if we transpose this to now the financial part of things, it reminds me of, you want to have a loan? Well, you can only have a loan if you want to do it through this digital identity service.
Yeah.
Or I
think it will be done the other way.
Okay.
So that if you use CBDC rather than conventional, then you will get a bonus. Then it will be made easier. But that would do the same, but it sounds better. I can say to you, if you buy a pizza from my friend Luigi, you'll get a 20% discount. But I can also say, do you know that Pietro's pizzas are 25% more expensive? It's just how you bring it. And that's what's going on right now, because these digital tools and the European digital decade, and they always say, well, all these investments that have to be made in this technology, which once again is very dangerous, and second, people never ask for it. The Corona money is used for this. All the Corona money that has been raised because of the healthcare crisis. I've looked at the numbers for Italy, for example. They've received €209 billion, and out of that money, only €9 billion went to healthcare. And 20% went to digitalizzazione. We have some trouble with
speaking.
but that's what happened. Now we say, okay, Italy now has the funds to invest in all this technology. But Corona was used as an excuse. And I think that this is horrible. You say, okay, we have a healthcare crisis. We raise money in Europe, and less than 5% of those funds end up in hospitals. 20% is being invested in technology that has no proven effect against that virus, restricts the movement of people and can be used for other purposes as well, and is being used for those other purposes. And then people accept it.
Yeah, it's clear that this corona pandemic also, like the French have heavily abused in their books to basically cover things that were already like really shady in the books, was basically leveraged during the pandemic to basically cover up a lot of mistakes, a lot of badly managed funds, all kinds of public spending that's just gone wrong, and to massive impact. And I'm not sure in the details now, but it definitely goes into the direction of what you
dive into that. That's,
Never let a crisis go to waste, right?
Exactly, that's it. It presents an opportunity. It gives you a window of opportunity, and you should take it. And but I think that that's deeply, deeply immoral. That if somebody is in trouble, then you take advantage of that person's trouble. You make it even worse, because you can also help somebody. You can also say, okay, there's a restaurant owner. He has to close down because of the pandemic. You can also say, I'm going to help you, so you don't go bankrupt. You can also do that. But you can also, what's happening right now is that certain legal changes are being made in the European treaties, which were planned years before, and you do that while people are off guard. And while you do that, you make it even harder for people to make a living, because you cause inflation, and they become less aware. But then, from a political point of view, from the integrationists, this crisis becomes a profit machine. The longer the crisis will last, the more they can do. And that's very, very anti-democratic if you think about it.
Yeah.
I mean, if you really want to make Europe into a complete federation, like the Germans want, and the Dutch government is going to follow the German government. It always happens. But the German government very clearly said, we're going to build a federation in the coming years.
A federalist.
A federal Europe.
European Union.
Yes. Just like
your European Federation, actually, not union. And
that's literally what it says. Europe should be like Germany.
It reminds me of the United States. You had the Union and the Federalists.
I'm very glad that you make this comparison, not another one. Let's not go there. That's what the German government says. The Dutch government follows it, and there has been no real debate about, do people actually want this? Do people want a European digital identity wallet? Do they want a European Commission? Do they want that institution to have so much power? All these questions have never been answered.
What's your solution, Arno?
Leave the European Union.
Okay.
Take all the consequences. Well, this is an abusive relationship. And a lot of people also say, well, you know what, we make money trading in Europe. That's true, but first of all, you can't. The fact that you're in the European Union has hardly any positive benefits for you. I mean, trade itself brings benefits. There are also nations like Norway, and they're not part of the European Union, but they can trade. And what the European Union is very often doing is saying, okay, but we are the proponent of trade, so any benefits that are associated with trade, you have me to thank for. But obviously that's wrong. I mean, if I bring you sushi and you love the sushi, and I don't know if you like sushi, but
I love sushi.
Okay, I bring you the best sushi in Amsterdam, and you eat
please.
it.
I've only eaten disgusting sushi in Amsterdam, but please show me the sushi.
The best sushi of Paris.
You will invite me on the great sushi.
I will organize this for you. I will bring you the best sushi in Paris. And then you look at me and you say, oh, that's Arno. That's the guy that delivers such great sushi. No, that's not true. I took somebody else's sushi and I brought it to you.
But you knew where the best sushi was. You're a great curator.
Yes,
the curator of the best sushi ever.
But the real benefit is in the sushi and the guy who makes it.
Yeah.
And in European integration, the real benefit is in free trade. So if two nations say
access,
we're going to give each other access to each other's markets, and those nations are alike, they will both benefit. You don't need a complete political project on top of that. That's not true. The Netherlands and Norway are both very rich, and they have a very good relationship, and they trade while not being in the same political entity.
And countries have been trading with each other for hundreds of years.
Yes.
So there's no need for
there's no need.
Political superstructure.
And this political superstructure is now doing things and going to do more things that harm you. So you're in an abusive relationship. I would like to compare this to somebody who, if you're very drunk and you have a partner who is, and you're with that partner, you're in an abusive relationship. You end up waking up, you were a little bit drunk, and you see that somebody did something to you which you don't like. And then the other person will say, yeah, I had to do it because of the pandemic, and the benefits outweigh the cost, yada, yada, yada. No, the whole concept, the whole democratic concept of you will only do something with my explicit approval, that concept has been broken. That trust has been taken away. If you organize a European digital identity wallet without somebody ever having asked for it or being able to vote for that, then you're infringing your values and your solutions to people. An institution that does precisely that, is wrong, and that will only cause harm. That's my conviction.
Okay.
Because if you were so sure that you want to do it in a democratic way and that you can explain to people and convince them as to why these measures need to be taken.
And what the benefits are.
And what the benefits are. Why don't you go out on the street and tell people what you're going to do? Hold a referendum. Talk about it in elections. That's what a Democrat would do. Why do you do it behind their backs and wait for a pandemic to happen? That's sneaking up on people. And people that sneak up on you can never be trusted, whatever the arguments are.
The ultimate consequences of course, and we have a lot of historic references, right? We see these big empires growing slowly and then suddenly collapsing under their own weight, but also a lot of times, most of the times, under autocratic, tyrannical governments. Centralized, decentralized, but tyrannical, oppressive, without benefits.
This is autocratic. I mean, you have taxation without representation. Inflation is taxation.
True.
And you can't do anything about it.